Hello, everyone. I hope you're enjoying our event today. I'm Eric Mettemeyer, and I lead our corporate development initiatives here at EML. And what I'd like to do today is to talk to you a little bit about our FinLabs initiative at EML. FinLabs is an element of our accelerator strategy, and you would have heard a little bit about that in some of our other presentations today, as well as in some previous, more recent investor presentations. And as a reminder, accelerator is about, pun intended, accelerating our product offerings with respect to our payments as a service and banking as a service payment stacks. The goal of accelerator is to ensure that we are offering to our end clients the most relevant and up-to-date payment technology solutions in the marketplace. Now, we can do that through a couple of ways, which we are. The first being just internal investment in our dev teams and our product teams as we build out additional feature functionality on our payment stacks. But we're also taking a portion of our R&D capital and we're aligning it with early stage payment technology companies that have specific expertise in a particular area that rounds out, again, our payment as a service and banking as a service platforms. Now, these investments and these partnerships with these early stage companies do involve a minority investment by EML into the company, but it's not in the traditional sense of venture capital. So a portion of our investment is being used to prioritize the integration of their technology into our payment platform. And we also, because we're part of the investment team with the company, we get access to their expertise and their ongoing investment in a particular payment vertical. Symbiotically, we also look for opportunities to take our EML products and push them into their payment offerings, and they benefit by having a more rounded offering for their end clients, and then we benefit because we have some additional distribution opportunities through their platforms. So we find it to be a very healthy way of accelerating our platforms in payments and banking. Now, I'm happy to announce today that we've completed our first two partner investments. One is in the area of bank account payouts, and so that would complement our card payout solution. And the other is in open API infrastructure, which I'll talk a little bit more about. And that complements our open API initiatives internally as well. And so shortly, I'll be leading a roundtable discussion with the CEOs and founders of these two businesses. But before I do that, I think it's worth providing a bit more background and context around our accelerator strategy and then how FinLabs fits into that. And if you think back about a decade ago, we saw the rise in a lot of startups, particularly around consumer financial services, where they were transforming the user experience when it came to a financial transaction. And so some examples are companies like Square that enabled a small business to take a card payment on their mobile device. You had Stripe that enabled a small business to build an e-commerce site where the ability to take online payments was already integrated into the solution. You had things like Amazon One-Click, where you no longer had to type all your card details into the website to buy a good or service. More recently, apps like Robinhood, where you can open up a stock trading account within a matter of minutes. Credit Karma, where you can see your credit score for free. And guys like Cabbage that we're allowing a small business to access debt capital online in a very short period of time without having to go through the traditional process of going into a bank branch and going through lending committees. So we're all aware of those examples, but what we're seeing is just continued rise of fintechs solving more and more friction in the marketplace, whether it's for businesses or for consumers. And more recently, there's a lot of investment going into fintech infrastructure. And these guys are transforming financial services through open APIs and open platform offerings. And what that does is it enables virtually any software company to offer financial products to their end customers. And this is what's now being coined embedded fintech. So what these infrastructure companies are doing is they're really orchestrating all of the parts and pieces to put a payment product in a box, put fintech in a box for you, right? So they're orchestrating with the card schemes, the regulators, the banks, the payment processors, the cloud service providers, the web security firms, and they're putting that all together in a box for a software company to come in and consume and embed fintech into their companies. And in the future, we're starting to see this is going to start happening on a low code or no code basis. So there's going to be less and less development skill required to embed these products into your business. I say a lot to say this is where EML sits today. This is where we see ourselves. This is where we've been moving towards, and we're going to continue to invest in this part of the ecosystem. Over the last few years, we've opened up our infrastructure. We've got loads of fintech sitting on our platform, utilizing our technology to really be the backbone to a lot of their business. To say it maybe differently is to say that we think about ourselves being the fintech to the fintechs. And so in summary, just to kind of bring all that back around, the goal of FinLabs is to accelerate our fintech in a box offering as it relates to our payments as a service and banking as a service solution sets. And we hope to do that in a way that enables and enhances fintech companies around the world. Hello, everyone again. For this part of the session, we are going to have a roundtable discussion with the CEOs and co-founders of our first two FinLabs investments. So I'd like to introduce the participants. First, Dylan Massey, who is the CEO and co-founder of Interchecks, a US-based payments as a service provider focused on payouts. And the second is Mike Kane, who's the CEO and co-founder of Hydrogen, a US-based software as a service provider of payment and banking products via an open API marketplace. So to follow on from our FinLabs discussion, I'd like our guests to share with the audience their perspectives on marketplace opportunities with respect to their fintech infrastructure offerings. And so I'm going to start, Dylan, with you. I'll ask you a question with, and if you'll give us, weave into that a bit about Interchecks and what you guys do, that'd be helpful for the audience. But what is Interchecks trying to achieve, and how is Interchecks trying to achieve it?
Sure. So both good questions, probably at the core of the business, so I should be able to answer them okay. So at a high level, what we're trying to achieve, if you were to summarize it into one line, it's, can we make it easy for a business to personalize their payouts to somebody on demand? And I think that theme is broader than just payments specifically. Like in the US, Burger King had a campaign for 40 years that said, "Have it your way." But even if you look at personalization is a theme that we see in cable. We're no longer buying these cable packages and spending hundreds of dollars a month for thousands of channels. we're picking Netflix, we're picking HBO Go, and we're building our entertainment experience a la carte in that way, so we can watch whatever we want on demand. And you can even extend this to healthcare with oncology and treating people with cancer. Personalized medicine is much more effective than just blasting your whole body with radiation, as an example. And so what we are doing is taking that concept, bringing it to payouts, and really trying to make it easy for a business to pay someone out however they want to be paid out. And we've seen for a couple hundred years, the ways that you could be paid for centuries actually was just cash or check. And then maybe as we got into the 1900s, a few more methods started coming to market, direct deposit, one of those, prepaid cards, another. And then maybe the inflection point was the early 80s with the internet. And then you started having wallets coming to market. PayPal's an example of that. And even though PayPal is built on top of our existing payment infrastructure, people will still assign its own method to PayPal, the same way they say, pay me through Venmo. So the number of ways that you can be paid have grown up quite a bit. And then, that's leaving digital assets, Bitcoin, Ether, and all sorts of other cryptocurrencies to the side. So we saw that, the rate of change for the number of ways that people could be paid going up quite a bit. And so our platform really wasn't making a bet on any one method being successful. It was making a bet on the future becoming more complicated and the value of the platform sitting in between to keep it simple for businesses growing as time goes on. So I would say that's really how we're, what we're trying to achieve. How we're trying to achieve it is plugging all those methods in together, creating a uniform experience for businesses that makes it really easy for them to offer. Typically what we've seen is businesses making this trade-off between making my process more complicated and offering more payout methods. So my process can become a little more complicated and I can offer more choice, or I keep my process simple and constrain the number of ways that I can allow people to be paid. And what I think Interchecks really set out to do was eliminate that trade-off altogether. So I'm a business, I no longer have to make that trade-off decision. I can pay people out however they want to be paid with something as simple as providing someone's email address.
Excellent, thank you. Mike, a little bit of that sounds similar to your endeavor at Hydrogen. So I'm going to ask you just really the same question. So, what is Hydrogen trying to achieve, and how is it trying to achieve it?
It's very similar to what Dylan mentioned. We call ourselves Embedded Finance Simplified. Very similar business problem from a different angle that Hydrogen's trying to take it from is simplifying what we call embedded finance. And what that is very simply is the ability for companies that aren't traditional financial services firms. So they don't have banking license, they don't have payment licenses, and they don't have millions of dollars sitting around to build that infrastructure. How do they join this new fintech revolution? And how do they digitize and offer these different products, throughout cards, bankings, payments, investments, et cetera? That's really what we try to do, is solve that problem that exists in the market. And there's 30 million small businesses in the US, and there's only a handful of fintech companies. What we're trying to do is take that same kind of fintech technology and allowing those other businesses that don't have fintech developers and PhDs in payments and aren't, that haven't worked in the space for a long time. How can they offer these different services? So very similar problem from a different angle. And it's very interesting for us to see how all the different companies in fintech are attacking different niches and different verticals, and how they're going to market, really with solving the same problem, which is democratizing access to fintech products.
And Mike, we've talked at length over the past few months about your APIs and our APIs, and the concept of our APIs have generally been private. Your APIs are public. Can you talk a little bit about the differences there and how that's really core to your strategy?
It's a great point, and this is really an inflection point that we see in fintech in general. Throughout all technologies. How do we make technology more open, whether it's open source at the protocol level or just more open and public from a SaaS perspective, like what we're attacking the market from. And the biggest difference is we allow clients to sign up and we pitch it in 5 minutes. You could embed financial services within your platform because we give you all of the tools, whether that's through APIs or no code components, meaning that you don't even need to use the APIs. You could drag and drop different UI components that are built on top of the API infrastructure. So it's just an extra level of abstraction that we've built that's similar to firms like Stripe, where everything is public, and it just adds a bit more of complexity to building these platforms, because if everything's public, everyone can see it, everyone can break it, everyone can debug it. So your customers become your best critics at some extent. And so it definitely helps you as a business build the product because everyone can see it, everyone can use it, and you really have to iterate and build very quickly because of that.
Yeah. And I think about the way historically EML would engage with customers or prospective customers, and the level of coaching and deployment that we had to do. And we're clearly, moving away from that. You're saying, I'm not even going to touch that. Like you can come in, and it's all right there, and all you have to do is read the documentation, and you can make things happen on your own. Dylan, you're coming at it from a little bit different perspective through a portal, and your customers wouldn't necessarily be, a startup fintech, but it might be a large or a medium-sized bank. So how have you used the portal to make it easier for your customers to ingest your products and launch them across their businesses?
Yeah, and so I think what we found that is kind of interesting is, yes, we do have the portals that make the platform very usable out of the box, maybe in the same way that Hydrogen with the no-code apps make it very easy for a business to plug into it. And as you mentioned, like we do sell into banks quite a bit, and that's like a more of a product that we had launched more recently, which is take the Interchecks technology, white label it, turn it into your own. And the portals, it's kind of been interesting, is we do have APIs where people can build their own user experiences around the product. But what we found more and more is that there's a lot of demand for something that just works out of the box. We do have the optionality of the APIs if you want to leverage it. But the flexibility of allowing a business to initiate transactions electronically through their own UIs via our APIs, or maybe they don't have the technical resources at all, or maybe they just don't have them available right away. It's nice to have the portal experience available for banks and other FIs to take advantage of.
I think it's really important, Eric, point Dylan made of customers are really demanding now that things are easier to use and more orchestrated and more productized. We're moving away, I think, and Dylan, I'd love to hear your thoughts on this, away from having customers having to solution and put the pieces together. And a lot of people have lower and lower attention spans. There's more and more software, and they're looking for ways of just people telling them, what should I be doing? What should I be using? And making it easier. So that's a trend we see throughout technology, is making things more plug and play and more consumable for whether you're a big business or small business.
Well, even if you're in the treasury, we live and breathe these products, right? So it's like, we've put a lot of thought into the design of how things should be structured. So you're actually wasting a lot of time if you just try to build it all on your own. So to the extent that you can leverage something that somebody's already built and put a lot of thought into the design, and more importantly than making sure the product is working for you when things are going right, you want to design it so that when things go wrong, it's not causing a lot of headaches around the business. So to your point, it's something that we've put a lot of time into, and we're seeing more and more attention on taking our design and in the same way you guys are doing it, having people put their own branding on top of it so they can extend it to their client base.
Exactly. I think it's really smart.
Yeah, the flexibility is so important. Dylan, something you said resonated with me is, you can be talking to a large bank. They may very well have the development resources to write to your APIs, but they don't have the resources available right now. And so using the portal is a great way to get going. And, in a reverse situation, you could, a bank would have those resources. And so giving them the option, right, is important.
Yeah, giving them the option and, giving them a roadmap too. I mean, like if you do want to build it all in-house, which is perfectly fine because, there are a lot of people that want a ton of control over their own user experience, which, I can totally appreciate. You can at least give them a roadmap from what we've already built to say, hey, if you are going to design it, here are the pieces that you want to consider.
Yeah.
How do you think about making that roadmap and those instructions replicatable and scalable? Be interested to hear more about that as you build that out. And you're dealing with big banks and they have different data infrastructure. How much solutions consulting you're doing up front versus ongoing to do that?
It's actually interesting. Mike, you had mentioned earlier about kind of the open source value of your APIs and your technology generally. We've done something kind of similar and not in the same way, but in white labeling the application for multiple FIs, the feedback that we get from everybody is kind of crowdsourced and added to the platform that everybody else can take advantage of. So it's a piece of technology that actually gets better the more people use it, because when features are recommended by Bank A, who knows? It's probably a situation that Bank B can benefit from as well. So in the same way that you guys have it open sourced, we're actually kind of crowdsourcing the platform in a different way, but to the same effect.
That's interesting, because then you could have everyone give you feedback and you could make it once and then sell it to all of them. So it's really scalable for you. I think it's smart.
Exactly. And like if you were building it in-house on your own, you wouldn't have the perspective. If you're Wells Fargo, maybe you wouldn't have the perspective of First Horizon Bank as an example, and vice versa. So, and even on the prepaid side, Eric, working with you guys, there might be certain things on the prepaid design that we're hearing from somebody else that might be useful to incorporate into the application. And so it's something that's kind of unique, and you sit, Mike, in a similar way that you're sitting on top of like all of these different banking products. We're sitting in between all these different payout products that folks for decades have specialized in. So it's kind of interesting to see a melting pot of ideas come through to build like an application that serves everybody better.
It's awesome.
So, Mike, you've gotten feedback obviously from your beta. You've had customers come in. What sort of give us a flavor for the types of customers that are coming in that want to take advantage of your products?
That's a great question. We actually were very pleasantly surprised on the breadth of companies that are looking to get into this space and embed financial services, especially on the cards side. If you strip out the pure fintech players, and these are entrepreneurs building fintech apps and startups, there's over 8,000 of those startups just in North America alone. Think about that. And those are the ones that are being tracked by CB Insights and other firms like PitchBook. There's probably tens of thousands more out there. But we see firms like e-commerce companies, small businesses. We had a steel company sign up the other day. A lot of companies that are looking to offer rewards cards, payouts cards, disbursements. There's so many use cases. I think we have over 100 use cases already we've come up with just two types of cards, a consumer reloadable card and a disbursement card. And that's based off feedback from customers.
What's been like one of the more interesting use cases that you guys have seen? Eric, we were talking earlier about Starbucks like receiving a ton of liquidity just from their gift card program. Are there like other use cases like that?
Yeah, we just had someone the other day who came up with a use case where they were printing checks for reimbursements for like travel. Let's say you're in an airline and they're doing reimbursements of their customers are getting stranded. They wanted to instantly do that on a phone. So there's a lot of use cases like that I've never really thought about. And as we talk to more customers, they keep coming up. Like the steel company is a good example. He said they have 1,000 customers who buy from them globally, and they don't have a branded card. They don't get any money back. They have a portal where they could purchase materials from them, an invoice. So why not make another 1% on the purchases with the branded card? They send it to them. It's nice packaging in the mail, and it really embeds them inside of that experience. So there's so many of these kinds of use cases just in the cards alone. And then when you look at banking and insurance and lending and personal finance, there's thousands of them. So what we've been trying to do is rinse and repeat. Take a small number of components and put more use cases in the market. So you take 5 components and you say, well, did you know there's these 10 use cases you didn't know about for these components? It's not just a one-size-fits-all use case. So I think that's important for a SaaS platform, is to make things very scalable.
Yeah, that is really the beauty of the kind of, coming at it from an infrastructure play or a platform play, is that you don't have to think of all the use cases. There's so many, and it's, which one do you pick? And so you let, your customers are the experts in those verticals or those use cases. And your platform just has to be flexible enough to handle, 100 different ones or 1,000 different ones.
Yes, right. And then I think the key is architecturally, and this is to your question before about public versus private solutioning versus more of SaaS and no code. It takes a lot of thought and architecture to build something where it's like a puzzle piece where you could fit it together, because you may have that one component that you can configure for those different use cases, but you have to really think about that beforehand. And I think where a lot of companies have gotten into trouble in the past is they do more custom solutioning. And Dylan, I'd love to hear your thoughts about that. They're doing it after the fact. So every time a customer comes to them, they just keep adding new API endpoints and adding more features. You really have to do it before. And you have to talk to the customers and come up with more of a blueprint. Like, it's like building not like a house, you're building more like a village and more like a town. And you have to be a master planner to build some of these platforms.
Yeah, and to that point, we have a client that we were just talking to today, Eric, kind of in conjunction with your team, which is like day one, they just want to launch a card product, but a year and a half from now, they want to offer a whole savings program as well. So it's how can we make that whole transition a little more seamless if we just think about it a little more from the start? So I agree with you, Mike. I mean, it's one of those things that you can certainly, one of the things that we like about the platform is that you can bolt things on, but I think you're losing, and the nature of the clients that we're dealing with, not everybody is as forward thinking. I guess we can help them to the extent that we can. But it certainly helps, to your point, to make sure that we're thinking through those things with the clients ahead of time.
Yeah, just thinking about the long history of EML and back in the day, we were always bolting things on, right? It was we weren't that master planner, and it was a few years ago that the light bulb came on to say, that's not very scalable, and we've got to change the way we're building things and thinking about our design. So. And we've done that, and then being able to add you guys into what we offer and vice versa creates a wonderful network effect as well.
Well, it's a good, I know, Eric, we had talked earlier about, or at least one of the questions, which is like, banks and innovation, is it more difficult for them to accomplish versus just bringing in a fintech partner? And at least on the payout side, we've seen like a lot of like FIs, I guess, struggling to retrofit, I guess, their existing architecture to fit in a variety of new products versus just building something completely from scratch. And that's why, there are a few reasons that we could go into as well in terms of like why we think innovation's been maybe a little more constrained on the banking side than maybe previously. But certainly it's the idea that you have this old architecture sitting out there, and it's really hard to just say, I'd rather start from the bottom up than let me see if I can tweak something I already have to accommodate something new. And that's when we just tend to see, at least with the folks that we compete with, it's just a little harder to build a very streamlined experience if you're trying to kind of like put tape and glue over things that already exist.
Yeah. Yeah, you're certainly at an advantage if you can start with a clean slate.
Right.
It's very, very hard. Most companies really struggle with, I would say, the architecture of building some of these fintech platforms. And that's a lot of what we see is we're an ecosystem player. We partner with firms like EML and others that we glue together. And when we go out and we try a lot of different products from different startups, sometimes you have to peel back the onion 1 or 2 layers, because that on the surface it looks really nice and shiny, but when you actually look at it, it's not very well architected. And I think that's the biggest thing that customers, whether they're a bank or a small business, really have to understand, and that's really hard to get across as a company in the value prop, because it's not always apparent until they start using the product, and it doesn't work very well. So that's what we've been trying to do, is really architect things well, think ahead, think from a design perspective and a product design, and how the pieces will fit together. And like Dylan was saying, when they come to us a year from now and want to add that savings component, how do we do that without ripping down the entire platform? And not many fintech companies do a good job of this, frankly.
Mike, what's been, your experience in working with EML? I guess I would say that, you're helping us get better with the way we're designing things so that they fit into the way you've thought about your plan. So, do you have that experience with some of your other partners on the platform that you find yourself helping them streamline the way they present their products to their customers?
For sure, yes. We do this now, for example, outside the card space. For payments, we're partnered with Dwala, which is a public partnership. We're one of their half a dozen or so partners on their website. So firms that come to them, they want to use payments to some extent, but they don't know what they're supposed to be doing with the product, how they're supposed to orchestrate it. Because to do a payment, it's not a standalone product. You need KYC, and you need maybe cards or banking or investments or insurance. There's other pieces there. So what we partnered with them on is, how do we put these into products, into solutions? And then we'll solution them on our platform. And when the client comes to them and they're stuck, Dwala can say, hey, you could use Hydrogen to be able to offer these different payment components. So it's a lot of productizing for the partners. And vice versa, we learn as well a lot. For example, with EML, when we go into a lot of these partnerships, we don't know what we don't know. We haven't been on the front lines of a lot of the legal compliance, dealing with banks and back office and regulations and running programs. We're more on the software side. So we actually learned a lot dealing with EML and other partners on how does that work? What are the contracts like? What are the different nuances of the business? Because we haven't been in it for decades, like some of the folks at EML. So it's a good learning experience for us as well. So I think it's good symbiotic relationship with the fintech. EML, I consider a fintech as well. But we're a newer company, and we're teaching EML hopefully about how we're thinking about the product, and EML teaches us a lot about card programs, program management, things we didn't know before.
Well, the old adage that 2 minds are better than one, and maybe stealing another term is, the network effect, but we're all learning from each other, and we're moving forward quicker as a result of sharing our experiences across each other. Exactly.
It's really important.
Yeah. Dylan, maybe one last question for you. We talked about some of the use cases that came in through Hydrogen as they went out to market. We talked a little bit about banks. What are some other areas where you're seeing some other examples of some use cases where you're seeing a fair bit of traction in your business?
Sure. Well, if you're talking like in comparison to the banks, in terms of like who might be interested in a disbursement or a multi-payout platform like Interchecks, one of the areas where we've seen a lot of growth, and this is kind of admiration of Stripe in a way, is creating a simplified experience where you could have card processing or the money in coupled with the money out. And so Stripe did a very good job of that in 2009, 2010, right as the gig economy was coming to market, because I needed to be able to have one piece of software that helped me take money from a rider who was riding in the back of an Uber. And then at the same time, once I have those funds, push it back out to the driver. And that money in, money out experience holds true for Uber and marketplaces like that. It holds true with Amazon for people that are purchasing products and pushing those monies back out to sellers after they've earned it. We see it in the direct selling space. We see it in online gaming. I need money to come in to place a bet, and then if I win, hopefully, then I get the money out. So we've been approaching, because Interchecks is focused on the payout side, we've been focused on a lot of card processors who might be looking to compete with a Stripe as an example, to have both the money in and the money out. And then there's been a ton of public M&A, just combining the two things. So you could look at FIS and WorldPay coming together. FIS more on the payout core banking side, whereas WorldPay was more on the card processing side. PayPal connecting or buying Hyperwallet and connecting that to their Braintree product at both ends. Even with like Fiserv on the payout side and then First Data on the money in side coming together. So we've been looking at a lot of card processors to say, hey, if you want to replicate this kind of experience, you can have Interchecks out of the box. The other area that we've been looking at, and this is kind of where we fit in with you guys at EML, which was that Interchecks, for the most part, was focused on non-card disbursements. So we see card as a very vital piece of the disbursement puzzle, but not the entire story, in the same way that the non-card options are not the entire story. So what we've been doing is saying, hey, you're an issuer that's focused on one particular method. So it could be Deluxe with checks as an example. It could be EML with prepaid cards. Even it could be, we haven't talked to Dwala, but it could be a Dwala with ACH, and I know they just launched a push and debit product, but how can we fill in the product gaps for folks that have been focused on one method in particular and bring that kind of full suite of payout options to market much more quickly for them? So I'd probably say like the card processors and then the issuers that are focused on one or two of those methods in particular.
That's very interesting. I mean, you're looking back at your own industry as a source of traction, as opposed to maybe downstream to the gaming company or the insurance company or whoever's doing the payouts.
Right. So I mean, and we do have. So we have a white label. The go-to-market for us is a little easier if we're white labeling over somebody and they're selling it into the market. So we can be very good at building scalable software that the bank can then take and then sell into other areas. But to your point, we do have a focus on certain markets that we believe are like really high value, high growth markets. Online gaming, as you mentioned, was one of those that we just see a ton of pent up growth here in the U.S. as more states legalize sports betting in particular. One of the things that I think Stripe did well, and I think is pretty admirable, is they kind of keyed into really quick growing industries in such a way that the underlying industry was growing so quickly that Stripe, even if they weren't signing new clients, was still growing at a pretty rapid clip because their underlying client base was doing the same thing. In gaming, as an example, we see something very similar. So sports betting might only be legal in New Jersey and Colorado and Indiana and Michigan. But one day, presumably it'll be legal in California and Florida and Texas and some of these larger states with bigger populations. And so we are being strategic in terms of the industries that we're focusing on to make sure that we can kind of grow in a similar trajectory.
Okay. Then I'll leave you both with one last question. Mike, you can go first, and then we'll conclude the session. This has been great, guys. What's a big challenge for you today as you think about scaling your business, Mike?
I think I probably have a similar challenge to Dylan. It's just really hard in fintech to put all of the pieces together. I think any entrepreneur in this space will tell you that. It's a big lift, just a lot of regulation, legal, privacy. It's very competitive. There's a lot of VC funding in the market to get good talent. It's very competitive to get partnerships, very competitive to do advertising and to get customers. So it's really just getting everything together. And that's probably a similar challenge I share to other entrepreneurs in the space. And how we're overcoming it is we've already, I think, got over that hump, and we've built the platform. Clients who've tested it really love it, and we're ready to get into the market. And we think it's huge disruption that we have. A SaaS platform that allows you to embed multiple kinds of fintech applications without 3 to 5 year contracts, without spending hundreds of thousands of dollars. We could do that for $500 per month in a SaaS. So we're confident once we get out on the market. It was just a big amount of work and lift to get here. And that's really been the biggest challenge. But I don't think that's unique to us as a company.
No, I can guarantee you that it's not unique to you, just to you, Mike. I would say, like, in terms of like a payout specific challenge, and we've seen a little bit of this in that sometimes there's a trade-off that our clients are making between a better user experience and economics that they're used to. So like as an example might be the telco space. So if I'm issuing a prepaid card for a reimbursement for some or a refund, right, where the card is sent to folks, and then there's a certain portion of people that don't spend on the cards, which leads to breakage, and then a certain portion of that breakage is shared back with the company that issued the card. The idea of giving people more choices presumably would mean that more money is spent down off of that program, and so there's a smaller pie on the breakage side. So it's like kind of working with the companies in terms of what is that economic trade-off that you want to do for a better consumer experience. Another wacky kind of like industry where we saw this was in class action disbursements, where folks are signing up for a certain settlement and maybe they get a check in the mail for $4 or $5. A lot of people might not be willing to cash the check because it is such a low dollar value. And that's by design. So like making it easier for people to accept those class action checks by offering them choice and maybe more convenient ways. I mean, we were even trying like charitable donations as an option. So don't deposit the check for $4. Why don't you just give it to a charity? And that would actually encourage more people to like take their money. And so they might, you might be messing with like how the defense is thinking about the settlement amount. So we're running into like some of those like more nuanced challenges that like could be unique to us in pursuing this choice model. And then another thing, Mike, and this kind of goes into what you were saying before, is that, you're a startup, right? You're building a brand, you're building a reputation. Sometimes people would prefer to work with businesses that already have an established brand. So we've been working hard at, and then this is, one reason why I think like kind of the white label approach from our perspective has made a lot of sense, is because we can work with an EML. EML can validate that this is really good technology. They can put their own branding on it, and it'll make a payer more comfortable if they like the EML brand and they love the technology as well. So I would probably say that those are like maybe two of the more topical challenges that we're looking at.
I like the royalty use case that you brought up, or the class action use cases. I don't know if you remember that Seinfeld episode when he was signing all of the 50-cent checks from his royalty. It's very similar. It's a good use case, actually. We don't have that challenge yet. Maybe we'll find someone who has a Japanese game show and they get millions of royalties. That would be a cool use case, actually.
Well, we've seen the opposite, like where more of an emphasis on getting people their money easily and conveniently is like actually a competitive advantage of using one platform over another. Like gaming, in that market, if you can make it easy for people to take their money out, they might be more likely to put money in. So it's kind of like a weird dynamic. But if I'm a bettor and I'm putting money somewhere and I win, I know it's going to be really hard to get out. If I do win, I'm probably going to put my money in, place a bet somewhere else where I know I can get my money out if I do win, right? So it's like, it depends on the market, and that's one of the more interesting things that we're seeing and trying to solve for.
That's cool.
Okay, guys. Well, thank you so much for spending your evenings with us. It was a great discussion, and we are super proud to be associated with you guys and being both a partner and a financial sponsor of your businesses. And so I wish you all the best of luck and look forward to doing this again sometime soon.
Thanks, Eric.
Thanks, Eric. It's a pleasure.
Thanks, Dylan. It's great chatting.
Likewise, Mike. Next year we'll do this in Australia.
Yes, next time.
Yeah, we'll do it.
The beach behind us, right?
Yeah.
Okay.
Hi, my name is Clayton. I'm the CEO and Managing Director of ASX-listed MoneyMe.
I am incredibly excited to share with you what's been happening in the background between EML and MoneyMe. For some who may not know yet, MoneyMe is a digital business that delivers innovative credit products to a generation who are looking for better, flexible, simple access to finance for everyday use and those greater things in life. We are driving transformation of traditional credit through technology. In our core is an AI-enabled, automation-driven platform, an industry first, and perhaps only, that breaks new ground in not just data decisioning, but creating product diversification and incredible customer journeys. MoneyMe's high automation business that is predominantly distributed direct to customers. We originate a set of flexible credit offers covering personal loans, revolving credit, and our latest is the interest-free product. And MoneyMe is changing the credit industry. With award-winning innovation success, we developed and launched the first real-time credit card replacement product with EML. A customer can go from application to a risk-adjusted offer with a MasterCard in their Apple or Android wallet to transaction in store or online in real time. This is a substantial advance in the industry, and it is this innovation that enables us and industry to keep up with the increasingly changing demands of customers. Our mission is to be the favorite credit partner for Generation Now. This is the generation who have begun to switch from traditional ways to faster, flexible, and better credit experiences. We added new products and features that set a new benchmark of innovation in credit. New products that are making sense for tomorrow's world. We also announced a major breakthrough in our funding capacity. Led by a major 4 Australian bank, we now have the funding facility that unlocks immense scale, price advantages, and significant cost savings for the business. Having passed the $500 million in lending, this is a significant milestone and testament to the business. The MoneyMe Freestyle product, co-created with EML and enabled through MasterCard, are transacting on a day-to-day basis. It feels like it was only the other day, and I was presenting the possibility of launching a MasterCard-enabled virtual credit account in real time. And already, Freestyle is 41% of originations in our half year. They're using their Freestyle account for Uber, Deliveroo, Netflix, grocery shopping, and more. We added tap and pay with up to 55 days interest-free. The customer feedback is they love it. And unlike the traditional credit card, they like to manage their balance by knowing what the set repayments are. And again, in real time. And another breakthrough in innovation. We just launched Pay Anyone using Freestyle. That is person-to-person payments using your credit account. Customers can use Freestyle to pay anywhere, anytime, and pretty much anyone in real time. Now that's a game changer. It was last year we unveiled the collaboration with EML to deliver the virtual credit account. Now we're extending that and taking this further. The innovation in the lab we're working on is taking our most exciting and feature-rich product, Freestyle, and leveraging the international reach that EML has, expanding into new market opportunities. Unfolding this idea has been an incredible discovery, and we believe that our retail payment solution is primed for some of the larger international markets. And under the Retail Partners brand, we see an opportunity for accelerated distribution, customer growth, which has economical advantages. Through the retailer, we will distribute credit accounts on our Horizon platform that's integrated with EML's tech. The retailer, depending on their scale and brand presence, will have their brand tagged to the product. They will be offering their customers real-time deferred payment solutions under their brand and their preferred customer journey. The retailer gets to have greater visibility of engagement with their customers. Some part of this model we've seen, like Citibank and Macquarie deliver, but this is the next iteration, with automation, flexibility, and control back to the retailer. Our solution provides a loyalty value proposition, an important part of the retailer's differentiator, and value add for returning customers. So different to that frequent flyer program stuff that's expensive and offers no value to the retailer. Now, isn't that exciting? Real-time payment solutions with personalization for the retailer and international retailers. They offer the customer our product, we do all the heavy lifting, and we can do it well. The retailer with the Generation Now credit solution gets more sales, more revenue, and more engagement with their customer. How soon? Is that what I can hear you guys saying? Well, we're working on what that first launch would look like. And I can say we're confident with the progress we're making and incredibly excited for what next year looks like for MoneyMe and EML. There has never been a time that is more timely to innovate than now. You can see this is not just a personal lending business model. This is an innovation for tomorrow's generation business. Hey, Tom, Rich, and EML team, thank you for the opportunity to unveil our exciting plan, for your always-on inspiration, and for the incredible partnership that is unfolding right now. Thanks, everyone. I hope this has been useful for you, and enjoy the rest of your conference. Cheers for now.